Right now, the world is pouring an almost unbelievable amount of money into artificial intelligence. And when I say a lot, I mean an amount that just dwarfs any other tech revolution we've ever seen. So the big question is, are we witnessing the birth of a whole new economic age? Or are we just watching the biggest financial bubble in history inflate right before our eyes? Let's dive in and figure it out. Okay, just to give you a sense of the scale here, look at this number. $690 billion. That's what just five of the biggest tech companies are expected to spend on AI infrastructure in 2026. Not over a decade, in 1 year. This isn't just an investment wave, it's a financial tsunami. And that brings us to the big question, right? The whole reason we're doing this explainer. Is all this spending actually building the foundation of our future, or is it just pure speculative mania? To get to the bottom of that, we've got to peel back the layers, and we're going to start by following the money. I mean, the amount of cash flooding into AI is just something we've never seen before. And it's not just the amount, it's how it's being concentrated. It's so extreme that it has a lot of market veterans really starting to sound the alarm. Now, this is where it gets really wild. See, back during the dot-com peak, venture capital was spread out and went to all sorts of different internet ideas. But today, in just the first half of 2025, a mind-blowing 53 to 58% of all global venture capital money went straight into AI startups. This isn't just a popular trend, it's like a black hole for capital. So let's break this down a bit. On the bright side, the stock market's overall valuation, what's called the forward PE ratio, it's not nearly as crazy as it was back in 2000, so that's good. But here's the bad news, and this is a classic bubble warning sign, that extreme concentration of investment. I mean, when more than half of all the smart money is chasing the exact same idea, you have to ask some serious questions about the risk involved. And this quote, man, it just says it all. This is from Ali Ghodsi. He's the CEO of Databricks. And he said this, get this, while his own company was in the middle of raising $10 billion. So when the people at the absolute heart of the storm, the ones cashing the giant checks, are openly calling it a bubble, you really have to pay attention. And it's not just the insiders, the pros agree. A recent survey found that 54% of global fund managers, these are the people who manage trillions of dollars for a living, they believe AI stocks are officially in bubble territory. They see the hype, they see these numbers, and yeah, they're getting nervous. Okay, so we've seen the financial picture. It's pretty wild. But now let's pivot from the abstract world of money to the very concrete, very real world of physical constraints. Because for all this talk about the cloud, AI runs on actual hardware that needs actual resources, and we're starting to slam into some really serious limits. For decades, the biggest thing holding computing back was the chip itself. Getting more transistors onto a piece of silicon. Well, that's changed. Today, the number one barrier to scaling AI, the single thing that could stop this whole revolution in its tracks, is electricity. To really wrap your head around this, think about a simple Google search. It uses a tiny, tiny amount of power, but a single query to a generative AI model, that can chew through up to 1,000 times more electricity. This isn't just a small step up, it's a completely different energy equation for the entire internet. And that insane energy demand is creating this whole new thing, the AI data campus. We're talking about these massive facilities that need 500 megawatts of power or more. That's not the power for a factory. That's the same amount of power needed for a huge city district, all going to one corporate campus. The utility companies are already saying, whoa, we can't build power plants that fast. And the forecast here is pretty stark. The tech research firm Gartner is predicting that by 2027, 40%, nearly half of all AI data centers will be hamstrung, not by a lack of demand or slow computers, but by a simple shortage of electricity. The AI dream is literally running into the physical limits of our power grid. So next time you see a picture like this, with all these intricate chips and circuits, don't just think about data. Think about power. Every single one of those little pathways, every chip, is contributing to this insatiable hunger for energy that is starting to change global demand. All right, let's switch gears. We've talked about the hardware, the physical world. Now let's talk about the software. Because hiding behind all the hype and the incredible demos, there are some fundamental problems with the AI models themselves. These are the cracks in the digital foundation. So, a massive part of this current AI startup boom is built on something called a thin wrapper. Here's what that means. A company takes a powerful model from a giant like OpenAI, builds a slightly different user interface on top of it, and calls it a brand new product. The problem? Their entire business could be completely wiped out the second OpenAI decides to just add that feature themselves. It's a business model built on sand. And you know what? We're already seeing the consequences of this. Reports from 2025 are showing that a shocking 95% of generative AI pilot projects inside big companies failed to deliver any measurable return on investment. The hype is there, everyone's running pilots, but the actual bottom line business value, it's been incredibly hard to find. But maybe the single biggest technical problem is a very simple one. The models just make stuff up. In the industry, they have a polite term for it: hallucinations. But what it really means is that the AI will state things that are completely false with total confidence. And that one issue is a deal breaker for using it in high-stakes fields like finance or medicine. So the obvious solution is, okay, if you can't trust the AI's output, you just have a human check everything, right? Well, about that. A recent study found that 27% of companies check 20% or less of the content their AI spits out. That's a huge gap between what the technology can do and the oversight it needs, and it's exposing these companies to massive legal and reputational risks. Okay, let's recap. We have financial mania, we have physical roadblocks, and we have serious technical limitations. Does this pattern sound familiar? It really should. To figure out where all this might be going, we need to look back at other tech cycles and see the echoes of history in today's AI boom. So new technologies often follow this predictable path. It's called the Gartner hype cycle. First, you get the peak of inflated expectations, insane hype, money pouring in. Then you crash down into the trough of disillusionment, when everyone realizes the tech can't deliver on all those crazy promises. After that, though, you start a slow climb up the slope of enlightenment, where real uses are found, until you finally hit the plateau of productivity. Looking at all the evidence, it seems pretty clear that AI is at or very near that peak, and a painful reality check is probably just around the corner. But here's the crucial thing to remember: a crash is not the end of the story. The dot-com bubble bursting didn't kill the internet. Actually, it did the opposite. It got rid of all the unsustainable, hype-driven companies and cleared the path for the real, durable businesses, the Googles and Amazons, to be built on the infrastructure that survived the crash. This quote from investor Rob Arnott just nails it. The story of the dot-com era, that the internet would change everything, that story was 100% correct. The market's big mistake was thinking it would all happen in 18 months instead of over 10 or 15 years. The AI narrative is probably correct too, but the valuations today are pricing in a future that's still a long way off. And that leaves us with the final and most important question. A correction seems, well, it feels pretty much inevitable. But those hundreds of billions of dollars being spent on data centers and fiber optic cables and power grids, that stuff isn't just going to vanish. So the real question isn't if the bubble pops, but when it does. What amazing, durable, world-changing things are going to be built from the rubble?